What's up you guys, this is Christian for Hustle and Bustle. Stop watching TikTok and let's make some money. Today we're gonna talk about hard money lending. And honestly, whatever the difference is between private money lending, hard money lending, they're different than institutional money. I've heard there's a little bit of a difference between private money and hard money, but for simplicity's sake, let's just call them hard money or private money and use that term interchangeably because I'm used to say hard money. For example, I am a hard money lender. Now, I went to one meeting here in Jacksonville where I heard that I should not be calling myself hard money lender but private money lender, but really that doesn't really matter. Hard money or private money lender is a person like me or a small group of people that lend money on a property for short-term loan when you're doing usually a fix and flip. Now, institutional money, they usually lend, they may be lending on smaller deals like I am, but they usually lend mortgages, 30 years, and recently I heard there are 40-year mortgages as well. But they're not banks, which means they don't need to comply by the rules and regulations that the banks should. A little grape juice for adults. Now, why would somebody go to me instead of going to a bank? So fast closing is first of all. So for example, one deal that came across, the person called me for hard money loan and I did send him money less than 24 hours after he requested the hard money. Another thing, big thing, the bank is a full doc loan and they take 30 days, which we're gonna go later on, but they want the place to be livable. And usually when you're doing a fix and flip, the place is not in livable condition. So the bank will not give you a loan for a fix and flip property. Before I forget, because I always go into the video and I forget, please help me grow this channel. Hit like, subscribe and comment. Another reason is with banks you cannot do multiple loans. You can only close one loan at a time. And if you're a fix and flipper, you might be having 3 or 4 deals running at the same time, and the bank will not gonna let you do that. However, if I can loan you on all 3 or 4 properties, if they make sense, I will. And I'm not, the only thing I need is to walk through the property or send one of my people or inspectors or whatever, or GCs to walk through the property and tell me, yes, indeed the property is the ARV is 150,000. Right now the property is worth 100,000 and this person actually asks you just for 80. So there's a cushion there in case the person defaults. Those are short-term loans up to 6 months usually, and usually there is no prepayment penalty. Again, everything is up for negotiation. I have a feeling I've made that video already. I don't understand why the payments can be, and we're gonna go later on with what the payments are, in what points and what percentage, but usually it can be payments interest only for those 6 months that you're paying, that you're taking the money, or it can be, regular payments with interest and principal, or it can be just one balloon payment at the end. It's all up for negotiation. Personally, all of my hard money loans that I've given, they're just, I want the full amount whenever you close on the property, whenever you sell the property. I don't care about the interest payments, but I do work with people that I trust, which is a huge deal. This is a huge variable. You need to work with people you trust when you're small like me. When you become institutionalized and you have more money, like in the sense of a few $1 million, then your loan will be, it's not going to be a full doc loan, but you require some documentation. So how is that loan being facilitated? First of all, we charge points. The rule of thumb nowadays is 2 points and 12%. So basically, let's say I give you a $100,000 loan, I'm giving you today, and today you're going to give me 2,000 of those money back. That's 2 points. 1 point is 1%, 2 points is 2%. Or in other words, I'm not going to give you 100,000, I'll give you 98. But I will still charge you interest, or that 12% interest that I mentioned, on the whole $100,000, or 1% per month. So for example, if we do strike this deal, I'm going to give you $98,000 of a loan, and each month I will charge you $1,000. There's no prepayment penalty. If you give me the money next month, that's great, so I can lend it to you the next month when you give it to me back. Because why? I charge you the 2 points again. So if I can make my money back, if I can get my money back every month, that's great, because I'm gonna make 24 points for the year. But this is utopia. This is not how it works. Usually when they do sell the property, the flipper you lend the money to, they do sell the property, say 4 to 6 months, the funds are available for you to lend them again. And the idea is, at least mine, is to lend my money 3 times per year, every 4 months if possible. If not, it will be every 6 months, so I'm going to lend them twice. So on a $100,000 loan, I'll be making, if I lend them 2 times a year, I'll be making 4 points and 12%, which is $16,000 per year. 4 points is 4,000 and 12% is always going to be 12%, which is 12,000 a year. So that's 16K a year, which is a pretty good return on your money. In case the person defaults, like I said, you will obtain the property. Have not done that yet, and hopefully I would never do that, because I'm pretty sure that's a process. You gotta foreclose on them. So it's something to mention here. It's IRR, is internal rate of return. Basically, the faster they give me the money back, the more frequent I can basically lend them back, which will increase my IRR. What the investors are looking for is the LTV, or the loan to value. For example, if you have a property that you want to buy for 100,000, most hard money lenders will not lend you 100,000. They're usually going to lend you 80% of LTV or 90% of LTV, or it's all up for negotiation. Sometimes they're going to lend you 100% for LTV plus 50% of renovation cost. It really depends. It depends on the deal. I personally just lend money to people that I trust. They run the numbers for me. I usually try to stay within the 80 percentile, but it really depends on the deal and how sweet they make it, because sometimes they offer, you know what, I'll give you 3 points on this loan, or I'll give you 15% on this loan. It depends. It's all up for negotiation, but nowadays, today, the general rule of thumb is, like I said, 2 points and 12% for 6 months. Now, obviously, if in those 6 months they don't pay, there's an extension. What I usually do, it haven't happened yet, but I've asked other hard money lenders. What they do is they just charge you another 2 points for another 6 months. It's basically the same for us. If we're gonna take our money back in 6 months and lend them the day after and charge another 2 points, or we're gonna keep them with you and charge another 2 points, is the same for us. Actually, it is better if you extend, because if the property has been 6 months, you fixed it, you cannot sell it within the 6 months, we charge you 2 points, you're gonna sell it within 2 extra months. So basically, the money we gave you will be on your disposal for 8 months, but we're gonna charge you 4 points for that, and it's the same 12%. So it's better for us if you extend. It's not good for you, which we don't like. I want you to make money as a flipper, obviously, so you can keep borrowing from me. First position, second position, third position. What does that mean? First position means that I am the first one in line to be paid if shit hits the fan, if you default on the property. Second position generally should charge more money, more percent, more points, because I am less protected on a second position. If, say, I lend you $30,000 for renovation cost, shit hits the fan, the property is being sold for $100,000, you owe $90,000 for the first position, and you owe me $30K, I'm just gonna get $10,000. So I need more, let's say maybe 3 points, maybe 2.5 points with 15%. It's all up for negotiation, but second position should make more money than first, third position should make more money than second, and so on and so forth. Now what we look for here is the flipper. How much experience do we have? Are you in the business since yesterday or since 2002? How many flips do you make a year? Do you do 3 flips? Do you do 1 flip like I do? Or do you do 30? The more experienced you are, the low fee I'll charge you, the less percentage. I'll give you a better deal. Why? Because I know you're closing deals, I know you're getting them done, I know you're fixing them on time, and I know you're selling them very, very quickly. So that's why I'll give you a better deal, because I know my money are more protected, or you are less risk. Same like the bank. The more risk you're seen as, the higher the fee will be. The less risky you're seen, the lower the fee will be. And here I wrote, who is your usual customer? Flippers, BRRRR people who do BRRRR. which I'm going to talk in a different video. I guess I don't have a video on BRRRR. Standard deal is, like I said, standard deal for now is 2 points and 12%. What happens when they don't pay? You obtain the property, you foreclose on them, or you renegotiate to extend the loan. How can you become a hard money lender? Just have money. Like Glenn told me. Glenn, if you're watching this, you told me that when I asked you last year, how can I be like you? And he said, do you have money? So that's all you need. You just have money. So why would anyone use hard money lending? Because it's expensive money, okay? Well, it is expensive, but if you don't have 100 grand to buy the property for 60 and fix it for 40 or whatever the case is, you're going to be making 100% out of zero. And if you lend money for me, let's say I give you 100 grand, you fix the property, sell it for 130 or 140, let's say 140. After taxes, fees and everything, you're making 30K net. Yes, you're paying $10,000 in fees and holding cost and loan cost for me, but you're making 30 grand. So yes, you're borrowing for expensive money, but you're making money. You make 3 flips like that, you're almost making 100 grand a year, right? Nowadays it's hard to find those flips. Shut up, phone. Why would anyone become a lender is my almost final question. Because you have money on your disposal that you do not have a better use, or if you put it on a stock market, they're going to make you 7%. If you put it towards lending, they're going to make you 12% plus 2 points. It's more money. Yes, it is more risk, but generally riskier the investment, higher the return should be, supposedly. The downfall of hard money is, like I said, if somebody defaults, it's not really a downfall, but it's a hassle. But the biggest downfall to me is taxes. Hard money lending is taxed as a regular income, which is not good. And the only way so far I've discovered to outweigh that, because it is seen as a passive income, is to have more properties that depreciate, so you can offset that tax burden. And that's the only way I know. If you guys know another way to offset that hard money lending income, please let me know down into the comments. Alright, that's it for today, guys. Hope you enjoyed the video. Hope it was informative. If I missed something, please let me know. In the meantime, you know what to do. Hustle and grind. No, I'm just kidding. Just give it a like, subscribe, and comment. Alright, keep hustling, guys. I'll see you next time.